This is our Forex video trading blog for November 30th, 2010. And I'd like to start with the dollar yen. This is on our FX total view as a currency that has been up 4 days in a row. So it's very likely to have a reversal today. Our up or down 3+ day in a row counter trend trading system usually looks for sells at the upper containment bands if today continues as an up day. But if you see the market break down, and this applies last night, underneath the hourly and the previous week's high right here, you can start looking for sells all the way up here at 84.18, and there's some major support right here. Once it breaks underneath there, the trend's likely to go down to the weekly pivot, and you can see our trading zone level down here nailed the low of the day. Right here we had a lot of momentum to the downside, very little upwards momentum as the market went up, and you could have drew your trend line underneath the lows, and when that broke right here, went short with your stop right above the high. Notice our trend reversal signal also 15 minutes before that showed a likely reversal, and the IntelliTrend bars went red, and the trend continued and fell another 40 pips. Here's the CAD yen. The daily trend's down, the weekly trend's down, the monthly trend's slightly up, so this makes it a little bit more difficult. I focus mainly on the weekly trend, which is down. Price is underneath the hourly. You got major support right here, previous day's low right here, lots of support underneath here. Once it breaks all these levels of support, the next one's all the way down here, 20-day moving average, and our fib level that I draw on the chart each day was the ultimate low. Each of these support levels is your likely profit target. So if you started shorting it when it broke all the support right here, you might have had a small win or a small loss. When it finally broke down here, the market just exploded down. And anytime it's underneath the lower containment band, it's very likely to reverse and go back up. So you're looking at this area as a potential support area, then that breaks, it comes all the way down here. You want to exit your trade right here. And you have a nice little reversal with decreasing weakness, and you have like a little wedge pattern right here. Pretty decent place for a counter trend trade given the fact that my projected fib level held almost to the exact pip. New Zealand yen, prices underneath the hourly, the daily and weekly trends down. There's lots of resistance. Once the support level becomes broken, it goes to the next support level, comes back up here, can't get above there. You wouldn't have wanted to sell it right here because the market went up with a lot of momentum. But as it double and triple tops up here with almost no strength, you want to look to go short, make a little bit, and this one came down, went to our first projected fib level, and the market kind of stalled. That's a good place to get out of the trade, especially as the weakness disappears. You might have went short right here, but notice the amount of momentum on the way up. That would have made you a little hesitant too. If you did, when it comes down, you notice there's not that much weakness. You get out of that trade pretty much near break even, or maybe you might have made 5 pips. Now it made a slightly higher high. It made a slightly higher high here, which is a sign of strength, but then quickly reversed. I'm not sure I would have sold there because the fib level support, but once it came down here and broke this level, it's likely to go down to this next level support down here, and because of the explosive nature of the down move, this is our trend explosion system, you might have gotten short up here. This is actually an Elliott two-way fib pullback as well. You draw that on this move right here, and notice it hits the first fib level, reverses, hits the second one, reverses. Once it goes down and it comes back up, you have another wedge pattern right here. The explosive nature of the up move, little wedge pattern right here, and the market went up about 20 pips. Hourly moving average is a great place to exit any counter trend trades. The Australian yen, also the daily weekly trends down, the price is underneath the hourly, and this is a pretty decent place to go short. You might have gone short right here and had a small loss. 10, 12 pips, gone short again. This is a great place to get out of this trade because it's a fib level, it's the previous week's low, monthly pivot level, and you can see as it was going sideways right there, the statistical weakness fell off, so it's very likely to reverse and go back up, which it did a little bit, 25, 30 pips. So you would have exited that trade with a small profit. You might have got short here at the previous day's low, which is a resistance area now that it got broken. But there's pretty decent momentum. But the fact that you have a double top right here with almost no strength at the double top and the trend's down, pretty no-brainer place to go short right here. You draw your fibs off the first swing down to give yourself a likely profit target. And if it stalls at the first one, you get out. Most of the time you want to exit at the second fib target, and this is also one of the fib longer term fib levels that gets shown on your chart. So lots and lots of likely buying down there, and that was the end of the move. Pound yen, underneath the hourly, daily, weekly, monthly trends down, broke major support last night. Previous day's low, weekly low, 20-day moving average it appears. So this place right here is a pretty decent place to short. There's not a whole lot of momentum to the downside, so I would have probably avoided this currency until it broke underneath this fib level. Fib level is supposed to be major support, so when it gets broken, that's a major sign of weakness. Plus you can see increasing momentum to the downside. This is a great little trend line break right here. Again, draw your fibs on the chart. A lot of times the intraday fibs line up or come real close to the daily projected fibs that I draw each night. And there's also a monthly pivot level here, weekly pivot level, trading zone down there. This is very likely to be the end of the move, so you would have shorted this at 130.10 and maybe got out of this trade somewhere around 44 for 55 pip move. You have a perfect 1, 2, 3 bottom down here too. This is what a 1, 2, 3 pattern looks like. It falls, rallies up, pulls back, usually no more than 50% of the distance from the low to the high, and you can see the momentum on the way up versus the very minuscule momentum on the way down. And now keep in mind you're trading against the longer term trend, the weekly monthly trends down, so you're not expecting much, but when this goes up, you're considering this a profit target, goes slightly above that and comes back down. Usually they stall right here at the hourly when you do a counter trend trade, and so you're out of that trade. You went from around 129.80 all the way up to 46. So that's a nice little trade. Plus you got another pullback right here with decreasing momentum. You might have given that another shot and then exited at the hourly. By the way, the hourly is a great place to look for counter trend trades. If you see it come up to the hourly with less weakness, or I should say less strength than this, it's a great place to short. I probably wouldn't have shorted it because of the previous strong momentum, but that's a decent place to look for sells normally. Euro yen, prices underneath the hourly. It broke the previous week's low, the previous day's low. We have a nice little retest right here. The daily, weekly, monthly trends down. You know, you could have gone short right there, maybe exited half your trade there, and then the second half at the next fib level. This market was off the charts weak. Normally you don't want to sell underneath the lower containment band. Anytime you get a counter trend move up with almost no strength, daily, weekly, monthly trends down, it is permissible to sell, you know, within 10 to 25 pips of the lower containment bands. You go short right there, your stop would be over the bar's high, and as it goes sideways here, you move your stop there. And again, you always want to draw your fibs off the last move. And notice almost to the exact pip is where the price ended. So you would have gone short here at 20 and got out down here near 34 for almost a 90 pip move. Once it's underneath the lower containment band, you want to look for reversals. That's what usually happens. You also have a nice 1, 2, 3 low right here where, again, it went up with a lot of momentum, came down with almost nothing. Great place to go long. That trade didn't really pan out, but it did go up from 73 all the way to 06, about 30 pips. Not too bad. Dollar CAD, the daily trend's up, the weekly trend's up. I mainly focus on the weekly. If the price is above the hourly, you want to look for buys. You might have went long last night right here, and it didn't really pan out. You see major support at the monthly pivot and the 10-day moving average. Again, it breaks out above the hourly. You go long here around 10. It went up to 40, 35, 25 pip move. You might have bought this little pullback right here. But as you can see, as it went up, there was weakness in the market. Trend line over the bar's high eventually gets broken. The weekly trend forces come into play, and the market shoots up here. This is the first profit target. You have major resistance right here, and then our trading zone, which is our projected likely high of the day, worked. Now the market went up, pulled back, came back up again, can't break over that high, and you can see the strength is gone. So aggressive counter trend traders might have sold this little wedge breakdown. Wedge shapes that occur over a 3-hour period are usually pretty effective. You have this as a potential profit target, and this is your second one, which you can see our counter trend tools came into play here and stopped the down move. Dollar Swiss. This is underneath the hourly moving average, and so more likely to go down. However, the weekly monthly trend's up. So if you do take these trades, you know, this one happened to be exceptionally good, but most of the time when the weekly monthly trend's up, you want to look to buy down near the lower containment band. Our trend reversal triangle oftentimes is a good sign of a reversal, and so when the trend line off the bar's high gets broken, you go long with this as your profit target. Market's really kind of chopping around here, so normally you want to wait for a wedge breakout, and you got one. It was to the downside, and this was your first profit target, second, and the lower containment band again, decent place to look to exit, and you're out. And because the weekly monthly trend's up, I wouldn't have bought that down there because it was so weak. But when it comes up to the hourly and kind of consolidates, you have this previous trend line gets broken, you get in, and you got major resistance areas up here. And when it goes sideways at a resistance area, you get out of the trade. That was for about 30 pip move. Pound dollar is one of those currencies that has been down 7 days in a row. Extremely weak, however, it's been down too much, and you can really look for buys in this currency down near the lower containment band, especially if you draw a fib off the first wave down. Notice it went right to the Fibonacci profit target, which in and of itself is a great trading method, but it made a lower low with less weakness than it did the first time. And so great place to get in, and this just went up. You ride it, keep moving your stop up underneath the lows, and came up to resistance area up here, and you'd exit that trade with almost a 100 pip move. The 4 days are a counter trend up and down 3+ days in a row. Counter trend system is an excellent way of trading at the lows for currencies that's been down 3 or more days. Here's the euro dollar. It came to our fib level and did find support last night, this morning. The daily, weekly, monthly trends off the charts weak. And you can see it can't get above the 200-day moving average right here. So you have your little trend lines right there. When it breaks, you go short. This is your first profit target. The lower containment bands are usually the second. Anytime you get a counter trend signal and you're short, really look for any sign of the weakness ending. You might have got out of your entire trade right here. Notice how weak it is. That's usually a likely sign of reversal, so you might have gone short right here. You would have probably lost on that trade. Then you have to go short again when a few minutes later, 15 minutes later, it goes short again, and it fell down another 50 pips. Notice it made a double bottom down there with substantially less weakness than before. This is one of our best counter trend methods, and you might have went long right here and caught 25 to 30 pips as it went back up to this resistance sell area.